The following is paid programming. Welcome to Something More with Chris Boyd, certified financial planner practitioner and founder of Asset Management Resources, LLC, a registered investment advisor firm. We call it Something More because we like to talk not only about those important dollar and cents issues, but also the quality of life issues that make the money matters matter. Here he is, your fulfillment facilitator, your partner in prosperity, advising clients across the country, your host, J. Christopher Boyd.
Hello and welcome back to Something More with Chris Boyd. My name's Jeff Perry. I'm sitting in for Chris as he is on a well-deserved week off. And I'm very happy to have with me our Chief Financial Officer. No, I got it wrong, Brian, again, didn't I?
Yeah.
I know. Certified Financial Analyst, Brian Regan of Asset Management Resources. Brian's a frequent guest on our show. He's our go-to expert on all things economy, markets, investing, all these things. And so we're recording this segment on October 11th, and we're just a few days past the attack on Israel, which was last weekend. And while we could spend the entire segment talking about the atrocities and all that's happened and, you know, the many horrific personal stories and the political issues, and there's a lot of that going on, and our thoughts and prayers are certainly with the people of Israel as we are here today on the 11th, and we don't know how this attack is going to complete, if it is completed, and the response of the Israeli military and government and the other geopolitical events around the world. For this segment, Brian, I wanted to talk about on how it affects the world of investing, and that's a broad question, I know. So why don't you just start with your general thoughts? So over the weekend, you know, the markets are closed and you're trying to get some family time, but you see these things, you see this specifically, or these things in general that happen around the world. We call them geopolitical events, right? Geography and political events. And how do you process them, and what are you looking at to start to think about how it's going to change, if at all, your perspective on your current investments or taking moves on additional investments? How do you process these things as they happen?
Well, the first thing you need to do is not panic. I mean, I know that sounds obvious, but I think the knee-jerk reaction to a lot of people is to feel like they need to do something right away.
Right.
The reality is you never know all the facts. You never know what's going to play out, how things are going to move. So, you know, the way I start processing is I wait until the market opens and see how everything's reacting.
Mm-hmm.
You know, this is a humongous tragedy, and that, you know, is first and foremost most important. You know, I spent the weekend reaching out to people in my life that might be affected, whether they're friends and family in the area. That's really how I spent my weekend.
Right.
You know, starting on Monday, the bond market was closed, but the stock market was open. And
closed for Columbus Day, nothing to do with this, just closed for the holiday.
You could see ETFs that track bond yields, though, changing price, and you could estimate what's going to happen based on that on Monday. So that's how I started assessing. I started looking at the oil market. So it's the Middle East, right? So you would expect that oil would be the first thing that would be impacted if oil were to go up dramatically. You know, the expectation is that inflation expectations would also go up, which means that the reaction from policymakers would also mean yields going higher. And likely means that stocks would go lower. That's especially true if there's some kind of spillover effect. So, you know, my initial thinking is the diplomacy deal with Saudi Arabia is probably gone, that Israel is pretty close to, which you would think would have a more significant impact on the market than it did. But this was a deal that wasn't yet announced. There was just a lot of optimism around it. You know, when you hear something that Iran may be involved or likely is involved with either training or funding of Hamas militants, that could be concerning. You could think there could be some spillover effect there, but the prices haven't really moved. The oil price had already gone up fairly dramatically from into the 60s and now into the 80s, and it hasn't. It might have briefly went up, but it's right now it's settled back down into the 80s, which is interesting, right? So it's almost like this negative news was already priced in, or the possibility of a negative Middle Eastern event was already priced in. It's all subject to change, right? So far, it seems like it's contained to the Gaza Strip. Whether that continues, especially as a humanitarian crisis, occurs, that's anybody's guess. But I guess my processing went first, reach out to the people in my life that are affected, which, is more people in the United States than you think. If you are close friends with any Jewish people, there's a good chance that they have been to Israel, have friends and family in Israel. People who are being called up into the military right now. As somebody who lives in Boston, there's more than a few people like that in my life.
Sure.
So that, that's the first way I started processing it. Then I started looking at how the market reacted. Now, the good news is that when it comes to the market is we had a surge in the 10-year Treasury rate going on. And what seemed to have happened is this started putting a cap. There was a bit of a flight to safety. There was a positive or dovish Fed speak that happened at the same time. And the 10-year Treasury has fallen about 30 basis points in a couple of days. So the massive amount of volatility that we're seeing in the 10-year is continuing, but at least it's heading in a more positive direction for stocks, which is good. I've seen that over the last couple of days.
So Brian, let's break some of these down for the listeners who don't have the experience and credentials that you have. So let's hope you're talking about the 10-year, talking about the 10-year Treasury. So many people might think if we're having a geopolitical concern that is in the Middle East, which could escalate, could get bigger. In other words, the geopolitical scene could get fear, right? That could get worse, could have more parties involved. However, you want to find what could happen, the risks of this. Generally speaking, when that happens, what would happen to bonds? What would you expect to happen to a bond like a 10-year Treasury? Not counting all the inflation stuff, but just generally speaking, in a normal kind of situation, if you have a huge or a significant geopolitical event, what would you expect to happen with the U.S. Treasuries and why?
I would expect it to be buying in U.S. Treasuries, and that's just because there's a generally what we call flight to safety. Mm-hmm. So it's the dollar and the Treasury, despite whatever your political narrative might be, is still looked upon as one of the safest assets in the world. So people start to crowd into those spaces, and what we saw is the dollar go up and Treasuries go down, which is kind of exactly what you would expect.
So people from around the world or in the United States who have investments perhaps in other places and they're nervous, they might be bringing this to flight to safety, meaning into Treasuries, therefore putting down pressure.
Right, and it could just be the expectation that, hey, look, if this goes worse, yields are going to go lower, and there's a bit of a speculative trade there. It could be a bunch of those things, but that's typically what happens when there's a massive geopolitical event.
So staying along the lines of thinking about bonds, and now interjecting that we've had, I forget how many rate hikes by the Federal Reserve over the last period of time, and we're up in that 5.25%, 5.5% short-term range, Fed funds rate. Do geopolitical events play into the Fed's thinking about wanting to maintain stability and maybe just sitting on the sidelines if they were thinking about another rate hike, or just kind of keeping a neutral posture while these events are happening? Or do you think that they have no impact and they're just a separate discussion altogether, just based on the economy and interest rates and inflation in the United States?
I think they have an impact insofar as they affect inflation and employment. So that the Federal Reserve has a dual mandate. It's inflation and employment. And, that sounds very simple on the face of it, but there's a whole lot of things that go into inflation and employment. And in this case, I think the biggest risk would be a significant increase in energy prices. A significant increase in energy prices would filter through the rest of the economy. You'd have higher inflation expectations. In fact, over the last 6 months, we've seen a significant change in long-term inflation expectations to the tune of 25 basis points, which has contributed to the rapid rise in interest rates. So, I think these things are significant to what the Federal Reserve can and will do. So far, the reaction to what we've seen, I don't think the Fed has anything to be concerned about. In fact, quite the opposite. The rapid rise in the 10-year has done a lot of the tightening for them, and there's less reason for them to, continue the higher for longer stance if the market's starting to price in a term premium. It doesn't price in a term premium yet, but it's on its way, or it was on its way prior to the events of the weekend.
Mm-hmm. That's all right. So let's shift over to oil prices. They had a run up before, arguably nothing to do with the attack on Israel. They're rising for it. They settled in and stabilized now. How do you view that? Do you view that as an opportunity that oil prices are likely to go up if this crisis expands and maybe they're lower than you would anticipate? If you don't feel that that's the appropriate view.
Jeff, you might want to put your microphone a little.
Go.
Yeah. So Jeff, just to rephrase your question, your microphone went out a little bit. You're basically asking how I think about energy prices, if it comes into my thinking at all. I try not to think about it too much. I try to take the price as it is, as the market price. And the reason for that is I'm not good at predicting where oil's going to go. I don't think most people are. And try to, the best thing you can do in that case is take the market price as the market price. The oil price went up. I think it was pretty reasonable why it went up, just on the face of the announcements that Saudi Arabia and Russia were cutting 1.3 million barrels per day, I believe. Don't check me on that, which I think is a little bit more than 1% of the world's consumption of oil and gas on any given day. When you cut supply by that much, demand is pretty inelastic. It's not going to react as quickly to prices. But you got to keep in mind the reason why Saudis did this. It's because the expectation is that the Chinese economy is going to continue to deteriorate, and they're 50% of the world's consumption in commodities. That hadn't happened yet, but I think there is that expectation that it will happen. So if you have a country that's 50% of the world's consumption of oil, for example, and their GDP falls from 7 to 3, you can reasonably expect that 1% difference to be made up in the market to be found in equilibrium. That seems to be what's happening as of today. That's all obviously subject to change. In time, the shale producers will probably make up the difference over the next year or so. And all that gets priced into the market. I mean, what I'm really saying is there's way too many variables in this for me to predict what's going to happen. One thing I know for sure is that if the oil is trending higher, there will be no shortage of pundits on TV saying it could go to X, Y, and Z price, which I always think is the funniest thing ever, right? Anything could happen. What do you think is going to happen? You think it's going to go to 100 just because it's trending higher? Okay, it's pretty weak analysis. If you're going to comment on things like that, at least have a reason for it. I prefer not to comment on it because I don't have enough knowledge. There's too many variables to analyze. So what I do know is for oil and gas to be profitable, the price needs to be in the 50s. Below that, it could be pretty unprofitable. Here in the 80s, oil and gas companies should be pretty good. If it were to have a cyclical change because demand falls, maybe the Chinese situation's worse, then oil and gas companies will be less lucrative. Or what if the United States slows down from the torrent pace that it's on here in the third quarter, which is, I'd say, likely. So these are things to consider. Sure, supply was cut. Supply will be increased in the future, one way or another. and demand could also change. So, I don't have a strong opinion one way or another. And I think this is one of the reasons why the Federal Reserve doesn't include it in their core calculations, because they don't, with how many PhDs they have working at the Federal Reserve, they don't feel like they have a good handle on where it's going in any given time. Another thing I know is that it's cyclical, though. When it's up, it's probably not going to be up forever. And when it's down, it's probably not going to be down forever. And that's a good rule of thumb, I think, to live by when it comes to oil and gas.
So you mentioned at the beginning of the show, the first thing you did is obviously reach out to people that you know and that you care about and express your thoughts, your concerns, your prayers, and the personal side of it. And then when you start to process the information about what's going on and how it relates to your job and your position with asset management resources, you say you don't panic, right? That's the first thing, because a lot of people do panic. We know that a lot of people make subject for another segment, but a lot of people make emotional decisions at the moment based upon what they're seeing on their TVs or someone tells them, and they leave the market at exactly the wrong time, or they never come back. All these things. So take that aside. Do you also look at things like this, tragedies? Certainly it is, but situations like this, geopolitical events like this, do they create opportunities for you to make tactical moves in portfolios, or is that too short term of thinking and too uncertain for you to consider?
They could, but I think the big thing that I was noticing, and if you read my investor letter, I don't know if it's been published yet. Kathy would know better than me. What I was noticing in the market was a 10-year that seemed way too cheap, but to the tune of 20 or 30 basis points. So if I were going to make a tactical move, which I wouldn't do right now, normally this happens on a quarterly event, which wouldn't happen for a few weeks from now. But one of the things on the consideration set would be considering maneuvering the portfolio for, a fall in rates back to a more reasonable level. And this event kind of took care of that for me. So, I like to say sometimes I always want my articles dated correctly, and I want the webinars. I want to know exactly when the webinar is going to be done.
Right.
And this is the reason for it. I mean, things can change so quickly, right? And it's kind of interesting. This is a kind of an aside from your question, but
Yep.
I was listening back to my webinar from last quarter, and I said something that was wildly incorrect. And that was that I would be very surprised if the 10-year Treasury got anywhere near 5% over the next 3 to 6 months. Well, it got really, really close to 5% over the last 3 to 6 months. And to me at the time, it wasn't a very, very bold statement. But then I look at the portfolio, and we weren't really negatively affected by it. And the reason for that was because, I might have had an opinion on what was going to happen in the bond market, or really the lack of activity that was going to happen in the bond market. And even though that was wrong, the portfolio was positioned in a disciplined way where I wasn't, swinging for the fences on something that, could or could not happen.
So I have not read your investment quarterly yet, so I'm looking forward to that. And we'll keep those comments in mind when it is published, which should be any day now. We did see some, so I'm speculating here, but we did see some tactical moves being taken, or positions being taken, right after the attack on Israel, where I think earlier in the week we saw a huge spike in defense stocks, right? And so people are buying into the defense stocks, thinking that if this situation escalates, defense products, defense companies will have more earnings. Is that stuff you think about, or is that just happening too quick for the investing, for you to think about adding these two portfolios?
Well,
or do you think it's speculative?
We already own Lockheed Martin in the portfolio, in the individual stock portfolio.
Mm-hmm.
And in the ETFs and mutual fund portfolios, we own every defense stock in some way, shape, or form.
Good point.
So I don't particularly think about making a tactical move to the when we're already positioned to benefit from such things. But when it comes to buying individual stocks, I can't predict geopolitical events, especially, Israel didn't even see this coming. The idea that I'd see it coming sitting, in Boston, Massachusetts is laughable. So, what can you do? Well, why do I own Lockheed Martin? One thing that you can be pretty sure of is that Congress, whichever party is involved, is likely going to increase the defense budget year after year. They do it almost like a clock. I mean, sometimes it's more than others, but it always gets increased by some amount. Lockheed Martin, the way they do pricing is they do something called cost plus. So whatever it costs them to develop the product, they take that cost and they add a margin to it. Now this is a very predictable business, right? They got
Good business model.
They got a great customer with unlimited pockets who's always going to want to buy more. And they don't really have to worry about cost overruns too much because they're going to be able to charge it back through to the customer. So you can look at their return on equity and their return on invested capital, and it's incredibly attractive because they have this long-term predictable business model. Now, to me, that's how I analyze any stock. It's predictable, it's consistent, there's growth. And if you get some kind of big boom because of Ukraine or Israel or X, Y, and Z, that's probably because people are just speculating, and you might even want to look into trimming if you get some giant windfall because of something like that.
Yeah, in other words, a stock can get ahead of itself, right? Based on current events or news, it can.
Well, it's pretty hard to just say a stock is a company is 25% better than it was a week ago.
Mm-hmm.
On
an unknown determinant.
Completely unknown. I mean,
right.
Is Congress authorized new funding that I don't know about? Is it authorized 25% more funding? Definitely not that, right? I mean,
well, based on what's going on in the House, I'm sure they haven't.
Yeah, military budget's more than $800 billion. If they're not gonna raise it, $100 billion just in response to this, right? So you'd have to sharpen your pencil and do the math. That there certainly is a likelihood of more demand, especially as the weapons that you built and shipped get destroyed, they'd be replaced. Right. So there is a logical reasoning for that, but I don't really think it's a reason to buy anew.
Brian, we only got a couple minutes left in this segment, so if you have an individual listening and they're they're probably thinking about these issues, go back to where you started it, and how should the individual investor, whether they're working with a financial advisor like someone in asset management resources, or maybe they're managing their own portfolio of individual stocks or mutual funds or whatever they happen to own, how should they? We started out with process. How should they process information that's can seemingly be overwhelming in the news cycles, and they have that tendency to want to do something? What should they do?
Well, if you have a good financial advisor, you shouldn't have to do anything. I mean, the whole point of having a financial advisor is that you don't have to worry yourself about these things. You should be set up so for the long term where this should be, your money shouldn't be on your mind, and the only thing that really should be is the personal effects. And how do you do that? Well, if this is the type of thing that makes you extremely uncomfortable, and you don't have an emergency fund, well, forget about it, right? You gotta get yourself an emergency fund. If you have, let's say you have 3 different accounts, one of them's a checking account, maybe that's your emergency fund or savings account. Then you have a short-term taxable account, and then you have a longer-term tax advantage account. You're probably taking a lot of risk in your tax advantage account. If the markets go down, they'll probably get hurt, but you're not gonna draw from that for a long time. Your emergency fund should cover you for a while through any kind of market side, short-term market volatility. And the middle one should you should have some growth, but some comfortability with the fact that under extreme circumstances, you'd be okay to draw on that without any significant pain. So if you're not structured in some kind of simple logical bucketing approach like that, then you should find a financial advisor that's worth their salt.
Great. Thank you, Brian, for your thoughts. Thanks for joining us. It's a difficult conversation to have in the context of the attack on Israel and all of our emotional responses. But I wanted to check in with you for this segment and get your perspective on what we should do, and I appreciate it. Please join us next time, and until then, keep striving for something more.
Thank you for listening to Something More with Chris Boyd. Call us for help, whether it's financial planning, portfolio management, insurance concerns, or those quality of life issues that make the money matters matter. Whatever's on your mind, visit us at amrfinancial.com or call us toll-free at 866-771-8901 or send us your questions to radio@amrfinancial.com.
You're listening to Something More with Chris Boyd, Financial Talk Show.
Asset Management Resources, LLC, and J. Christopher Boyd, CFP, provide investment advice on an individual basis to clients only. Proper advice depends on a complete analysis of all facts and circumstances. The information given on this program is in the nature of general financial comments and cannot be relied upon as pertaining to your specific situation. AMR, LLC cannot guarantee that using the information from this show will generate profits or ensure freedom from loss. Listeners should consult their own financial advisors or conduct their own due diligence before making any financial decisions.